Hey everybody, this is Jose Blasco. We are about to start in 30 seconds. Let's have a quick sound check. A quick message on the chat box would do. Just a quick hello. That would confirm that you hear me well. Sound is good. Technology is on our side and we are ready to go. So please do that for me. If that's okay, I'll turn on my video stream as well. And again, welcome to the session, everyone. Here we go. On the bottom right corner. How are you, everybody? Thank you for the confirmation. Lilan, good to see you. Maka, how are you? Wonderful, guys. That's it. It's time to get started. We are live. Welcome to the session, everybody. Today is January 7, 2021. My name is Jose Blasco. Options give you options. So today it's all about looking at opportunities in the market using options as an instrument. We will look at different type of opportunities. As I just said, options give you options. So some of the opportunities will be directional, some will be non-directional. Again, we'll be looking at a collection of possibilities depending on what the market has to give us today. We don't have the power to move the market or to impact the market, but we are smart enough to adapt to what's available from a probability standpoint. And that's what we're going to do, position ourselves with that philosophy. And of course, always managing the risk, because while probabilities on our side is very useful, it's not a guarantee, isn't it? And a trade can always move against you, and we need to contain and limit the pain when that's the case, okay? Good. Talking about the consequences of trading and legality and stuff, on the upper part of the screen, there is a disclaimer, which I am highlighting right now. Please read it carefully. This is important information. I'm counting on you to read every single word. It's a short paragraph if you wish. So please read it carefully. As I said, it is important information, and you need to be aware of it, no matter if you are new or you are advanced. Furman, how are you? Gary, good to see you as well. It's a pleasure, guys, to begin 2021 with the first option session, isn't it? So therefore, it is definitely a must for me to say, even though it's already January 7, but it's a must for me to say Happy New Year, everybody. Happy 2021. And especially after the crazy 2020 that we had, hopefully things will get better soon, especially when it comes to health and, a lot of suffering that many people, many families, especially in places such as Europe, are going through. So hopefully all of this will get better. As traders, we don't really care. Actually, when the crazier things are out there, the more inflated the options, the more the volatility in the market. So you would say the more the opportunity. But from a human in this planet, 2020 has definitely been very, very problematic for many families. So hopefully, again, we all have a much better 2021 from that point of view. With all of this said, without getting too philosophical here, let's jump into the charts, okay? And I am now closing the introduction slide and moving into TradeStation. As you can see, I have a TradeStation charts here. I got the S&P ETF SPY on the screen. And the reason why, again, if you're new to the sessions, you may not know this. If you are, a regular, if you wish, you know what I'm about to say. I like to break the session in three parts. If you wish, we first look at the market and understand what's going on, because that kind of tells us the type of opportunities that we should find. From there, we review the trades that we already have running. And from there, we move into probably the most important or relevant portion of the session, which is when we are looking for new opportunities to be executed, where sometimes you guys take the trades with me, with paper money, real money, small size, or large size. All of those are, of course, your decisions, but I would say probably that's what you are looking for the most, isn't it? So let's begin with the S&P, and again, we look at the S&P from a climate point of view in a daily time frame. So yesterday and today it continues. We started an up climate, which is confirmed. So two candles into what statistics suggest could be or should be or is likely to be at least a 10 candle move. So, we would expect the market to continue pushing higher for another 8 days. It will not be something surprising. Actually, this is what probabilities suggest. We are getting that thanks to auto climate, okay, which for the ones of you that are new, how are you, Mark? I'm just seeing your hello. Good to see you. For the ones of you that are new to our sessions, you need to know AutoClimate is an app available for both TradeStation and TradingView, and it's free. So you could certainly turn it on. And if you don't know how to do that later on in the session, I'm happy to show you how. Anyway, so AutoClimate suggests the market is in a healthy condition to continue going higher. Of course, probabilities sometimes are not met. For example, you can see here the market had a push, but it was a 5 candle push instead of a 9 candle push. So again, it's not always the case. Here you got another one which was 4. Okay, but then you also have pushes that maybe 15 candles, which is more than 9. So again, 9, it's what probabilities suggest may be met, may not be met, but is a great reference, which is mechanical, with no thinking, with no biases. It's what probabilities suggest. Okay, so that's the market environment we have. And if you were to look at the VIX, and by the way, making all times high, that I didn't say because I guess everybody is aware of that. Okay, here we go. So now loading the VIX. So let's take a look at what's happening in the VIX, because if you recall, around the US election, so the VIX, that was November, the VIX hit about 40. We had fantastic trades at the time, actually, very nice trades. Then the VIX went quite low, around 20. Okay, that was in December. And now currently the VIX is trading at 23. So again, the VIX is in the low side, even though for the ones of you new to trading options, if you look at a monthly time frame, okay, actually 23 is not that low. Okay, that much lower. Is more about 10, 12, something like that. We've got a lot of trading in the past years that were around values way below 20. So 23 is not necessarily that low, even though, of course, if you compare that with 80 or 40, it's quite low. Okay. So in other words, when the market are in this particular type of condition, you would expect, because if you think about what I just said, it's not too clear if it's high or low or what, right? And when you see market conditions like that, typically what tends to happen, and it reflects in this way in the prices of options, is that you find few opportunities of each type, but only few. Okay, so it's not. I would not expect in a day like today, with this type of market data, to find 200 stocks to go long, 200 stocks to do iron condors or non-directional trades. I would not expect that. I would expect few units of stocks, okay, per strategy. And therefore, it's actually a good thing in the sense that you don't need to spend too much time researching for opportunities. It's easier, you find them and you take the trade, or you don't, and then you come back 2 hours later, 3 hours later, check again. Because that's what it is. That's what the market is giving us, okay? There are times where volatility are very high, and therefore you have plenty of opportunities to sell options. There are times where volatilities are crazy low, then you have plenty of opportunities to buy options. But when it's kind of like today, so what you normally find, it's little of everything. So notice what I found on the scanner, okay? And I run the scanner before the market opened, so that was a few hours ago. But notice that on the directional strategy pointing to the upside, meaning directional long, notice that the scanner returned 3 symbols, which again, if I run it now, I may have a few more or maybe a few less, but it's only 3, right? And if I look at directional short, notice is none. And if I look at purely non-directional, I got 13. If I look at neutral long, I got 12. And if I look at neutral short, I got 7. Okay, so it's kind of what I told you, putting on the side that, the parameters on the scanner, when you look at all those parameters, we are normally inputting settings that filter out the markets in a way that is quite demanding. So we actually purposefully like to have few symbols per scan, because if not, what's the purpose of the scan? The purpose of the scan is to save time. If you were to have so many symbols, first, you will not save time. Second, the parameters you input will not really create an edge. And we want the filtering not only to save us time, but also return symbols that have a statistical advantage, okay, based on the type of trade that you're planning to do. So we are actually trying to do that. But again, given the current market conditions, the lists, as you can see, are quite short, okay? And you guys may have a different quantity of symbols, again, depending on when you run the scan and things like that, but that's what I got, okay? So, so what are we gonna do? Well, if you think about, first of all, the longer list, it was non-directional, so I'm gonna start there. Also, when it comes to the VIX, you don't need to do what I'm about to say, but if you were to be like super purist or perfectionist, so what do you see on the VIX? Well, there is no green UFO below, and there is a red UFO very close by. So, in other words, what's likely to happen? Well, what's likely to happen is that it's either the VIX will keep falling, so you want to sell options that are about to become cheaper, or if options go back up, there is not much room for options to get greater increase in value, and from there they should lose value. So again, you don't need to chart and trade the VIX. If you wish, you don't have to do that, even though certainly it's a smart thing to do if you could afford it, in the sense of the amount of opportunities available. And definitely starting with non-directional opportunities or neutral, meaning selling options, seems to be the smartest thing to be done, given the amount of opportunities available and what is likely to happen to the VIX. Okay, hopefully all of this makes sense, guys, because my plan every time I conduct a session is not only that you get to see how I trade, and hopefully you learn from this, but also, most importantly to me, what's important is that the way I lead you somehow gives you clues and tools where you are building your own trading plan. So the days we are not running sessions, you have the tools to practice on your own by following a specific set of rules that you decided for yourself, as you understand the pros and the cons of the different elements I bring into the sessions. Okay, because there are many ways on how to trade, and there is no right or wrong in trading, as long as you follow certain key principles such as risk management, emotional management. You use tools such as UFOs, where you have odds in your favor, or any other tool. And as long as you are following some of those principles, then you could have so many different rules, and basically it makes us all unique on how we trade. But know that because there is no sure thing in trading, it's all about probabilities. So everything you decide that you want to have in your plan has pros and cons. And again, my intention here is that you guys understand the pros and the cons of everything I do. So you decide if you want to incorporate what I do into your trading, or maybe do some sort of a variation. And by the way, feel free to ask. Okay, if you decide to do variations and you're not sure if it makes sense or not, feel free to ask. Okay, no harm there, and happy to help you as well to decide what's best for you. Okay. Anyway, so sorting the list of symbols from the most expensive price to the cheapest. So that list is ready for me to start trading. Okay. Now, I just completed section 1 of the session, which is understanding what's happening in the market and kind of defining what I'm about to do. Section 2 was to review the trades that we have running, and section 3 will plan the trades. Okay, so I'm going to come back to this list in a second when we do section 3, but let's not forget section 2, which is to review the trades that we have running. And by the way, this is the first session of the year, meaning that it's been like 2-3 weeks that we haven't done a session together. So all of those trades that I got in the list are basically trades that you could have closed already. Okay, so I'm gonna review it and explain what to do or what not to do. But anyway, so all of those trades basically they are over. Okay, so let's begin with Roku. Okay, so what's going on with Roku? Well, Roku was a beautiful trade where in November we bought the 260 call. And the red line, okay, it basically represents the places where we have been trailing stop, trailing stop, trailing stop. This was the last session, okay? So that was maybe, in the middle of December, something like that. So let's go back to, let's pretend it's middle of December, okay? So let's go back to, let's say December 15, okay? So at that time, what did we have? Well, actually not yet. It was a bit later, I guess. Let me see. It was Thursday. Okay, yeah, so it should have been December 17, when we met. Yes, indeed. And at that moment in time, there was this green UFO here, and we said, okay, let's bring the stop here. Again, it's not a stop, it's an alert. And if price crosses the red line, just get out of this options trade manually or hedge it using stock, again, the call. So on the 18, what happened? Well, on the 18, it kept going higher. So we are still in business, still in the trade, reacted nicely to the green UFO. We moved to the 21st, which was the next week, kept going higher. So at this moment in time, you could have moved your line right there at 335. So you are managing the trade actively. On the 22nd, what happened? Another UFO showed up, If you are very purist, you could have brought in your stop to below 344. What else? Then we got the day before Santa Claus. Price came and how low it went in that week. It did hit our line low 344.21. It didn't hit 344.05, so it was 344.21. So still in business. And then we got Santa Claus come and visit. Well, actually, that was not much that day. On the 25, that was a holiday, isn't it? So nothing. So we are now moving into the next week. And again, I'm repeating all of this, which to some of you that may be very, very basic and simple. But again, for the ones of you that are newer, this type of tool of changing dates, those are very simple things that you may be doing already, or you may not have thought you could do this. And this may allow you to review trades, backtest trades, and things like that. And hopefully that's helpful. Okay. Now, the next week, that line was hit. And therefore, we would be out of this trade on the 28th of December. And we caught a move from 227 to 344. Okay. So now, out of curiosity, okay, I'm just going to bring in another chart. Okay. And here we go. Let's do something like that. I'm going to make it daily just to be, well, actually, let's keep it 55 just to keep it equal. Okay, absolutely equal. And now on the chart on the right, I got Roku, and on the chart on the left, what I'm going to load is I'm going to load the chart of the call. Okay, so we are talking about Roku, the call that expires in 2021 01/15 call, and it was a 260 strike. This is the call that was traded. So I'm just loading that symbol. Okay, I guess I didn't type it right. Different options platforms have their how did I type it? Okay, yeah, I should have made a mistake there with the typing. So let me go ahead and load the option chain and just get the symbol from the option chain, and that's it. Again, I was going to say that every broker has a different way to have the symbology for options, and I guess I got a bit confused there. Roku 260. I'm gonna have to load all, yeah. So 260 right there. So copy symbol, call, and now I'm just gonna go ahead here and type the symbol. Yeah, oh yeah, I typed 2021 instead of just 21. Yeah, silly me. Anyway, so the whole thing is now being loaded here, and let me go ahead and have no space on the right so we can see all of it well. Okay, of course, this is not a very liquid stock, so you can see there is a lot of missing data, but those were the prices that were traded. So let me go back to daily. It's going to be easier given lack of liquidity. So we entered on 11.12. Okay, so I'm just going to be rounding values, if you wish. So 11.12 was right there, and we exited on December 28. So December 28 was right here. Okay, so basically we got in this trade at this particular price, and I'm just using an approximate price, and we exited this trade at this particular price. Okay, so if we do some math about the performance of this trade, this was one of the trades of 2020. Okay, this is probably the trade of the year. Okay, so let's calculate the net change and the percent change. Okay, so that was a trade that produced 566% return, where we made $70 per contract out of trading a contract that was worth 12. Okay, so you put $12, which is 1,200, and you were able to sell it for 8,300. So you made $7,000 with a $1,200 investment, which is 566% return. So again, beautiful, beautiful, beautiful trade. Not every trade produces 500% return, of course not. But again, I'm just showing you some of the tools for you to be able to evaluate your own trades when that happens. When you do some back testing as well, meaning either before the fact or after the fact. So you have now tools to understand better how to understand what happens when you catch a move, because now you can see the move on the chart on the right, which is the move itself, but then you can see what happened to the prices of the options, because on the left, I am actually charting the options price itself, okay? Cool. Okay, so I'm just gonna get rid of Roku from the left part of the screen. This trade is over since December 28th. Beautiful one. What about Tesla? Okay, so Tesla is another trade that we did. That was a bull put spread. We did two versions of it. One with expiration December 18, and the other one was going to be the last day of the year, December 31st. We needed Tesla to stay above 45. Okay, and Tesla went all the way to 663, meaning that definitely stayed above 445. Okay, so both of those credit spreads ended up as profitable, so we are good with that one too. So goodbye Tesla, we are done with you. And then PTON, okay, so that was a trade that we planned where we were planning to go long, and this was a missed trade because we planned this trade on December 17. That was the last day we had a session together. And what we said last day is that, okay, if price comes down and hits the dotted line, we're going to buy a call and ride the move up. Okay. Well, the move did happen, but the retracement into our UFO did not, meaning that we did not meet our entry condition. And while this trade was ready to be taken, we didn't execute the trade, given the fact that the trade setup did not was not met. Okay, and the last one for me to be reviewed, and we'll start with the trades, is Intel. Okay, and Intel, if you recall, that was a long-term investment. This was a trade that we put together as US elections were happening. The volatility was 38.40, as we saw on the VIX, and basically on that particular day at this particular price, 44.52, and that was November 6th, okay, or about that date, because I'm looking at a weekly time frame, so it was probably November 5 or something like that, but about that date. So we basically sold 2 bull puts, and we used that credit to buy the 50 call. Okay, and what did we do? Well, the price, we took the trade, and then the price of Intel went up, and as the price of Intel went up, we were able to manage to close the credit spread for 20 cents, meaning that we collected a credit of 60, we closed it at 20, so we had a sure profit of $40. Okay, knowing that if the stock was to keep going, we would then make an additional profit on the long call we had. Okay, because we closed the bull put, so the only thing that was left was the 50 call, which was purchased not only for free, it was actually purchased for a net credit of $40. Okay, so worst case, you could not lose, you would make $40, and if it goes, then you would profit more. Now, in the trade management arena, we were using the daily time frame and using UFOs on the daily time frame. And by the way, I am still charting December 28th. Let me go to today's date, because the price of Intel is way higher today, isn't it? It's trading at 52. But notice that in this case, our trade management took us out, okay? Which it's not necessarily a bad thing, you will see why. But, so Intel was going up. There was a moment in time where there was a green UFO here, or somewhere there, and we decided to have a stop, or again, not a stop, but an alert to get out at 47.24, and notice how on that particular date, we went below that value, still above the entry. So we made a profit on the call too. I don't know how much, and I guess it's not worth it to check in this case, because in this case, it's not that juicy. But we did collect some profit on the call, plus $40 per contract on the bull put. And therefore, this trade was closed for a profit, even though later on, Murphy's Law, it kept pushing. And that is a part of the move that we missed, okay? And that's it. But it's not a big deal, okay? Why? Because the expiration date that we were using is actually January 15. So, even though we are above 50, 52 is above 50, and we have $2.48 of intrinsic value in this call right now, the reality is that, because this option is very close to January 15, today is January 7, right? So the amount of value left from an extrinsic value point of view in this call is basically none. Is very little anymore, and therefore the performance that this call is providing, even though it went higher, it's probably not that much better than when we got stopped out below the red line. Okay, so again, the trend management was in place for a reason, and it did what it had to do. So again, good job collecting a profitable trade that was basically free of risk very quickly, thanks to the extreme value of options around US elections. But the trade is over at this moment in time, and that's it. Okay, good. So all of this is for the review, a bit longer than what I would like when it comes to a review, but again, we haven't met since the last year, which sounds like a very long time ago, and we had some homework to catch up with when it comes to trades that we had running. Okay, but anyway, we are now, I'm just gonna go ahead and do some cleaning. Where is my delete thing? Interesting. Okay. Yeah, normally I have a remove button there, but I don't see it. So anyway, I'm just gonna remove everything. So by doing this, what I'm doing is I'm cleaning up everything for all charts and all time frames. Okay, so that's it, and I'm saving it like that. Okay, so we are starting now the year fresh, and all the drawing that we will do on the charts, unless I have a computer problem, I'll keep it for the whole year. Okay, so anyway, so let's begin, my friends. I'm gonna skip Google and I'm gonna start with Netflix. Okay. Again, nothing wrong with Google, but I commented in the past that I like to give you trades that are not the highest price points. Okay, why? Because I am assuming that many of you are in learning stages, and therefore too pricey trades equal too risky trades, and you could certainly execute those trades with paper money, but if you want to use real capital, then you may not be able to. Okay, so in that sense, I'm going to start with Netflix, which is $500. It's not a cheap stock, okay, but it's certainly much cheaper compared to 1,700, which is Google. Okay, reviewing the chat box as well. You guys have been very quiet. I know I've been non-stop. I know it's been basic for the ones of you that are veterans of our sessions. But I certainly appreciate a little bit of feedback. I see that you missed that one, Mark. Got you. It's what it is. It's trading. No, it's not a big deal from that sense. You know, there are many more trades to be taken, even though that certainly was a beautiful one. But guys, a little bit of feedback. How is it going? Everybody following? Any question, please let me know. Okay. Anyway, so Netflix, what do we have? Well, for now, we are looking for a non-directional trade. And first, not a very good news with 45%. So I'm going to switch from regular session to pre and post market, and it's 41%. So no trade on Netflix. Believe it or not, in recent times, there is much less institutional interest than what you would expect. Defining institutional interest by what happens to the orders if they don't get filled. Those orders seem to be canceled by those large market players. And why would they do that? Well, probably because they're not that interested or not that sure, or they want to reassess market conditions next day, meaning that the interest is limited. So that's what we have on Netflix, believe it or not. Okay, earlier in the year, or last year I should say, was different, but right now that's what we have. With Lulu, we got 37%. With pre and post market, with regular session is 48%, and therefore that's okay for us to begin planning on a non-directional trade, because our minimum to be accepted for non-directional trades is actually 48%. Okay, so let's go for it. Okay, let's go for it. Now, before we get too excited, I can see green UFOs below, but only one red UFO above, and that is telling me that probably Lulu is making all-time high. I'm charting the monthly time frame to double check that, and that's the case. So that basically invalidates whatever non-directional trade I was going to plan, because another rule that we have when we do non-directional trades is that we need at least 2 UFOs above and 2 UFOs below. In this case, we have 2 UFOs below, but only 1 UFO above. Okay, so we cannot do it. So we're going to move to Spotify and see if this one will give us an opportunity. I'll take a sip of water, guys, if that's okay. Thank you for that. So we have pending data here on the upper left. So I'm just waiting for data to be fully downloaded. That value of 50% doesn't mean anything at the moment. Okay, now everything is loaded. 50%, that's good. Pre and post market is giving us 38%. That is not acceptable. But again, same story. We got multiple green UFOs below, only one red UFO above. So hey, let's take a look. Oh yes, Spotify also making all-time high. By the way, should we expect this to happen often in many of the trades that we'll assess? Well, the answer is yes. Why? Because the S&P itself is making all-time high. So that means that many stocks are probably in that situation, making all-time high or about to make all-time high, and that is likely going to produce this type of situation. Okay. Now here, looking at this chart, I'm certainly very, very uncomfortable with that buy on the Jan chart, where we have this huge move and then only one UFO and it's all the way there. And yeah, great, we have this 52%, that's great. But again, if you have to sell options all the way above 355, I mean, how much premium are you going to get for that? So my only hope is move to pre and post market and have closer UFOs and also probabilities that are 48 or more. And I do have closer UFOs, even though they're still very far. But probability is 41, which is below 48. Therefore, I'm going to pass and move to Amgen. So let's take a look at Amgen. So Amgen, well, we got pending data, so I cannot assess yet. I need to wait. Okay, I'm just gonna click on a few more of the stocks. I'm gonna be charting later on, so the data starts downloading. And when I get there, we have less waiting time. Okay, so back to Amgen. Let's see if the full data has been downloaded. Yes, it has been. So with pre and post market, we got 38%, so that's not good. So I'm moving back to regular session. Now we got 51%, that's fine. And we got multiple UFOs above and we got multiple UFOs below. So that's fine. Okay, that's fine. What else is fine? The earnings date is fine. I didn't zoom in properly. Let me do it again. Here we go. So June 28th, I'm not sure why I said June. January 28th is the next earning date. And if you look at the calendar, of course, today is June. Again, why June? January 7, right? So in other words, you could use 15 and 22nd. So we got like 2 expiration days that we could use for this trade. Now, the only thing that makes me a bit uncomfortable, okay, is that if you calculate the distance from current price to those 2 UFOs above, and you project the distance below, create a new parallel, and I project the distance below, okay, that's bringing me into the middle of that UFO, and I need 2. So in other words, I will need to use that one, and that means that the current price of Amgen is not really well centered in the range. It's a bit closer to the upper part. It's not too exaggerated, and if you were to take the trade, I would not say it's wrong, but it's not ideal. Okay, so in this sense, I will continue working on my list, and if I find nothing, then I'll come back to Amgen and see if we do the trade or we don't. Again, showing you a little bit of how I do it myself when I plan my own trades. So again, hopefully the process, the ideas I'm sharing gives you ideas on how to do it for yourself, okay? We got team with 52% and multiple UFOs above and below. If I look at pre and post market, we have 41%. That is not acceptable. So then going back to the regular session data. So again, we can see 2 UFOs above and 2 UFOs below. We can see earnings being on the 21st. So we can use January 15, which is next week. All of this is good. So if I measure the distance from current price to those UFOs above, and I measure the distance from current price to 2 UFOs below, okay, so where I'm at, well, it's kind of like the opposite of Amgen. That one is a bit nearer to the bottom part. You can see, my line surpasses this a little bit. So we are a bit nearer to the bottom part and a bit closer to a bit further away from the upper part, which is the opposite as Amgen, okay? So again, it's not bad, it's okay, but it's not ideal. So I'm gonna keep Amgen and TIM there in my mind, and if I find nothing, then I'll come back to those. So 50.97, this is good. If I look at pre and post market for Cigna Corporation, 37, that is not good. But again, I see no red UFO, so is that stock making all-time high? It looks like it, yes. So no trade for Cigna because we don't have the red UFOs. We need 2 above, 2 below. TDOC, 40%, that's good. What about pre and post market? Okay, waiting for data. Let's wait. You guys are really silent today. Can I have just a quick yes, I am still alive message on the chat box? Just joking, but at the same time, I would certainly appreciate just a little heartbeat from you guys, just so I know all is good. You hear me, and everything is going well. So 38%, no good. Thank you, Lilan. Appreciate. Happy to see you're alive. So 48%, that's good. But again, we don't have any red UFOs above, and another stock that seems to be making all times high. Again, we're gonna find many like that. Okay. Following, very good, Mark. Thanks a lot. So I'm gonna keep going with the list. SE giving me 48%. If I look at pre-post market, 40%, so no good. If I look at the monthly time frame for SE, it's basically making all times high, so we're gonna pass. What about AMD? Home in Texas this week, very nice. I'm sure you're missing the gang. So pending data for AMD, 57%, that's good. But again, another stock that is probably making all-time high. We got 52% with pre and post market as well, which is very nice. But again, making all times high, we cannot do it. So we're gonna move to SPG. Okay, 55 minute. Waiting a bit here. So the monthly time frame, it's SPG is not making all times high. Okay, so let's see if we can get proper statistics. 45%, that's not good with pre and post market. Regular session will give us what? 48%, that's good. But now, unfortunately, while earnings are good, February 2nd allow us to use multiple expiration dates. Here, this is a very exaggerated case. If I calculate the distance from current price to 2 UFOs above, and I project that below, we are so far away from this price point, which is 2 UFOs below. So that one is like the one with Amgen, but like super exaggerated. So we're gonna pass. So I'm just gonna check the last one, which is AZN, and also not a very liquid stock. Okay, so I'm not gonna cry if it doesn't work. So 46%, not good, less than 48, and 44% no good. Okay, so our assessment here tells us that the best bet is probably Amgen, and the second best bet is probably TIM. So let's see if we can plan a trade on those guys, and let's see how it looks. We got a few minutes to go before we hit 45. I think I can do it. So let's begin with Amgen. And we're gonna start with this one. We can do January 15 and January 22nd. Okay, so I'm gonna start with 15 and see what stats suggest if we do January 15. Okay, so I'm just gonna click on a random strike to analyze and sell an iron condor. Change the percentages to 1 and -1 standard deviation, and we'll pick the strikes later on. Right now, I only care about the expiration date and the values above and below, which tells you that statistics suggest that traveling between 225 to 245 would be a normal thing to happen. Okay, so I'm just gonna draw a couple of lines at 225, somewhere here, and 245, somewhere here, and I have a problem. Okay, I have a problem because even using the 15 expiration date, so yeah, it's great. I could be using 2 UFOs below, which is beyond my dotted line. So the bottom part is perfect. But the problem is that on the upper part, I do have 2 red UFOs, but those red UFOs are within the dotted lines instead of beyond, right? Therefore, they are too near to price for me to use them to sell premium, because price could reach 241, 242 since statistics suggest that reaching 245 would be a normal thing to happen. So that's using January 15. Using January 22nd, it's even worse. If I use January 22nd, now it's telling me it could reach 248, which is even worse. So yeah, so no trade with Amgen. And therefore, the last one for us to check that could be the trade of the day. Hopefully it is, guys. I would feel terrible if we end up the session with no trade for today, which again, that's trading. I don't have control over the market, but certainly I would like to give you a little bit of homework and practice for you guys. So let's see if Tim will be kind enough to give us that opportunity. So with Tim, we have to use January 15. So I'm going to right click to analyze and sell an iron condor. Why do we need to use January 15? Because earnings are on the 21st. So we cannot use 22nd. It has to be 15. And with that 15 in mind, we're going to do the same, plus and minus one standard deviation. And it's telling us 218, 244. Okay, so 218, 244. Okay, so 218 style dot. Okay, so 218 somewhere here and 244. And that's looking good, my friends, because 244 is more or less here. So if I was to use two UFOs above, that is beyond the dotted line. And if I was to use two UFOs below, that is also beyond the dotted line. Okay, so that's looking good. And therefore, we will be using options above 248.5. We could actually use 247.5. It's okay, because I noticed that this stock got options which are $2.5 strike price increments. So we can use the 245. Sorry, 247.5, I meant to say. And that's good because they pay 57 cents, okay, which we have a rule that says that we need at least 35. So 57 is more than 35, so that's good. And then below, we're going to have to go for the 215. And the 215 is paying us 82, which is also more than 35. So my friends, so far it's looking good. It's looking like we may have a trade. Let me write it down and document it. So we're going to be buying the 250 call and selling the 247.5 below. All of this is going to be done using Jan 15 expiration date. Okay, I'm just noticed I got this in the wrong place. And then below, we're going to sell the 215 put, and then we're going to buy a protection, which is 212.5 put below. Okay, so that will be the plan of the trade. That will be the plan for the trade. Again, we don't know yet if the trade is going to be approved or not, but at least visually speaking, you get to see the strike 250, 247, 215, and 212.5. Calls above, puts below. That, my friends, is an iron condor. Okay, so let's begin with the calls. 250, 247.5. There is no 212.5, no 212.5. So that bothers me a lot. Okay, that really bothers me, because that's going to make the risk of the trade to be double. Instead of $250 per contract, it's going to be $500 per contract. Plus, we may suffer some liquidity problem as well. So, I mean, I'm just gonna try and see what happens. So that varies the upper part. I'm gonna have to do 247.5 and 252.5. I mean, it really bothers me because now we're gonna suffer 20 cents of spread instead of 10 cents of spread. Okay, so let me double check the chart again. If I was to do 217, you know what? I'm gonna do 217.5. Okay, and let me explain why I'm gonna accept that. I'm not making it up, guys. Okay, there is a reason why, and I need you to understand the reason why. So if this happens to you, you know why. So isn't it that 217.5 is below 218, right? So 218 is the price defined by statistics where that stock is not likely going to go there, below 218. So in other words, 217.5 is below 218. So it's a place where price is not likely to go. Again, in a perfect world, you will go for 215. But if I do 215, then in the upper part, I cannot do 250. I need to do 252.5. And I just get pain in the form of slippage. So I rather get the 217.5 to 15 because probably that's gonna create a higher quality trade if I do it in this way. Okay, so I'm gonna do 215 and 217 and a half. And if we do it like that, the question is, do we have a trade, yes or no? And I'm glad to say we do. Okay, but let me explain why. We'll take the trade and we'll conclude the session. So first, we said rule number one, the 247.5 pays us 57. That's more than 35, so we accept it. Rule number two, the 217.5 pays us 112. That's more than 35 cents, so we do accept. So that we said before, but I wanted to re-clarify it. Second rule, we need to look at what we call the roll risk. What's the roll risk? The roll risk is the distance between strikes on the call side and the put side, which we like to make it equal, which in this case is both on the put side or the call side, $2.5. Okay, so in other words, the roll risk is $250, 2.5 times 100 is $250 per contract. And the rule we have is that we take the roll risk, 2.5, and we want to collect at least 15% premium, 15% of that value as premium. That's 37.5 cents. And notice that the midpoint that this option is currently providing is 50 cents. Okay, if you do it at market price, you'll get 25, but we don't do that, isn't it? We don't do it at market price. So I would like you to get into this trade by asking 50 cents. And I'm not saying you have to take the trade. I'm not a financial advisor. But if you're going to get into this trade, my suggestion would be place an order asking 50 cents. Wait 5, 10 minutes, 15 minutes. If you don't get filled, just drop it to 45 cents and keep dropping it, never below this value. But let's see what's the maximum amount of premium you can get starting at 50, which is the midpoint. Okay, you may get filled at 50 or maybe 45 or just a bit below. It's looking okay from a liquidity point of view based on what I've seen in the option chain, and I believe you may get filled, especially if you do the trade with not too many contracts. I mean, if you're gonna go with like 50 contracts, so then yeah, you won't get filled at 50, no way. But if you're gonna do one contract, two contracts, just a few contracts, I would say probably it's gonna work. Okay, so I'm just gonna place the order myself because this is a demo account, and the way TradeStation works is that it will not get you filled unless you do market orders for the options. Please don't do that yourself. Okay, just you do it with a limit order. Okay, you do it with a limit order and you go for 50, as I said before. Okay, but I'm gonna do market so that way in the following week we can look at what happened to the trade, knowing that I entered at the worst price ever. Okay, because I'm gonna get filled at 25, I would say. Okay, so I just got filled. So if I look at the trade, okay, here we go. I got filled at fill price 25, okay, which is what I was expecting. Okay, so I got my iron condor there. I'm in pain already by 25. Why? Because it's the slippage. So please don't do that. Make sure you use a limit order and you shave the spread nicely. Okay, so team has been the trade of the day. I'm gonna document this trade a bit more, so when we look at the trade in the following weeks, we understand well what we did. So we entered in this candle, expecting price to stay there until January 15, which is right there. And basically, this is what we're expecting to happen. We're expecting the price of the stock to remain in the purple area, which is between the UFOs from now until January 15. Okay, so saving the chart. The chart is saved. The session is now over. I don't see additional questions, guys. I believe everything should be okay. I'm just gonna say goodbye. If that's the case, if you have any question, make sure you type it because I am about to say goodbye. In order to give you a little bit of time to say goodbye, I would like to point at the schedule very quickly on our website. Our next session, as you know, of course, is going to be next week on the 14th. So on the 14th, we will be reviewing that. But I was going to say, don't miss Becky tomorrow. But also, if you're interested in Forex, We are launching a course on January 30 to February 5. Our Forex course moved from 5 days to 7 days. So I would strongly recommend you to take it. Forex is a powerful asset. So starting on the 30, so you can register there on our website. But again, going back to what I was going to say, don't miss Becky tomorrow, looking at stock opportunities without options. Okay, but you could, as an options trader, certainly use Becky's setups and then place your options trades on top of that. Absolutely nothing wrong with that. And then next week we are back with Boyan and Pedro and Bert and Becky and Andrew and myself again, and then Reynaldo with trading psychology. So my friends, don't miss those sessions. I recall very well the sessions that we had on December 2019, not 2020, where you guys were asking for stock sessions, for trading psychology sessions. And funnily enough, the trading psychology sessions are the ones that have the less amount of attendees, which I could not understand why. So don't miss them. You may be the most knowledgeable trader in the world, but in the end, when you click the button, human emotions will kick in. We need to know how to control ourselves and understand the trader in us to be really consistent and profitable. Okay, guys. So use the sessions. Contact us. Send the questions. Speak up if you need anything, or if you think that anything that we do needs improvement, or you have suggestions for us. Make sure you are in touch, guys, because we are committed to helping you guys, and that implies communication. Okay, so don't be shy. We're here for you, my friends. You guys take care. I will see you soon. Be safe, and again, Happy New Year one more time if you joined the session a bit later or you're watching this recorded. Take care, everybody. See you soon.